What's up YouTube? Todd Horst here with Tasty Tracker and the 2023 account challenge. I keep saying I'm not going to do a daily video, and here we are. We got lucky here. Opened this up at the very end of 11/2. What was that? Was yeah, Wednesday. And first thing here, Friday morning, the stock jumps, and so we got lucky. We got about 50% here, and so we decided to close that off. There's no point in holding it longer than this. It basically has nowhere to go but down from here, go further against us, as not down as in the sense that we got lucky on the progress of the stock, and so if we were to hold it longer, it's going to go against us and actually degrade our performance, our ROI. So let's go ahead and take a look at that, and we'll look at run, and then I will show you about the closing. We'll do this one first. But yeah, so here FSX, FCX, I don't know why I can never say this correctly. Uh, we sold this on a day that was coming down. That is ideal when the stock is going against you. You'll have momentum to the downside that will inflate the premiums because people think it's going to continue to drop. Whether or not that's the case, we can see it did, gap down, or at least trace down some on Thursday and then closed above the low. So that's obviously a good sign. I have no idea why it popped. I don't really care. But now it's back up into this range. It's consolidated here and been moving up. Excuse me. And now it's back up here in this previous range, that dates back to the beginning of the year. So that's actually a really good sign for this ticker going forward. But for now, we'll exit and we'll take the win. Okay, so then the next position here, I got into run. And if we come over here, we can see run is on my list. It has one of these bolder green values, and I will get into this another day, as well as share this spreadsheet so you guys can play with it to your heart's content, but not quite ready to do that yet. In any case, it was run, right? Yes. So come over here, look at run. So, I'm looking at this, which, sneak peek. It's basically just looking at how much premium versus collateral. But that's very high. So these are stale numbers, but you can still see which stocks, and you could also look at the IV rank, which would largely tell you at least how much premium you're going to collect. So then I come over here to the chart, and look at this, it's having a down day. Again, I would prefer to have put on a position on a down day, so that checks that box where possible. It doesn't always happen, but it's also post earnings, and earnings were good. And then the earnings reaction was good. That's actually more important than earnings itself, in my opinion. Earnings, if it goes good or bad, doesn't really matter if it's what the herd believes or interprets that to mean. So even if earnings is good, but the herd wants better, then the stock could still go down. But anyway, we had a large push yesterday, so showing good strength, and then we come up here and bounce on resistance up here around 27. So anyway, so we sold the 20, which puts us down here, right at this support that has been, again, since the beginning of the year. And this is actually the third time it's come down to 20. So, you know, the more times it tests something, the more likely it is to fail. So you could say, oh, well, it's going to come down here and move lower. That's a possibility. I'm not going to say it's not. But at the same time, it's held almost all year since end of February, so the odds of it holding longer to me are pretty good. That's also decent ways to fall down. We got another $5 here on the ticker. And we've been on an uptrend here recently. It's pretty likely that we contend with the SMAs next week. So that's all I'm looking at here. Nothing too crazy. Okay, so let's go over to this, and I want to go over this closing section here. So I entered it in FCX. The entry date was 12/2, which we know is 2 days ago. The expiration date was 12/16. The sold price was 72. So what the only thing you actually have to change from day to day here is the mark price. So this you would all enter in at the time of entry, and then this you enter in each day to see where it's at. So the expected dollars per day is 164. That's just if you take 72 divided by how many days to expiration here, something like 44, 43, 45. I'm not sure what it was when I entered there, and I can't do math in my head like that. So yeah, so if we take 72 divided by 43, you get something like $1.64 a day, and obviously this is times 100. Okay, so the percentage increase takes these two and determines what that is. So that's about 50%. And return multiple, what is that? Well, if I'm expecting $1.64 every day, according to my entry guidelines, what I sold it initially as and the days to expiration, right? But it turns out that instead of making $1.64 per day, I made $10.64 per day. Well, that's $9 more than what I was expecting. So that would be a 9x, right? And so at the end of this, if you held through expiration, this return multiple would be 1x. It's exactly what you planned for at the time of entry. And we can see we are up here at over 11x, 11 times the rate of return of which I should have gotten. So that's where I go back to saying if we hold this any longer, this number is going to degrade and degrade and degrade further and further and further to a point where it gets down to 1x. So why would I hold on to something that's not only 50% and this is a general metric that a lot of people, would close this at. So that solves that problem anyway. It checks that box, I guess. But even if it didn't, even if this was only 15% or 10%, you'd still be, if you had an insanely high return multiple, you're inclined to take it because it's only going to go downhill from there. So another way we can use this number is if we look up here, this was the 72 one. I need to create, oh yeah, I did. FCX over here, we sold for 72. This would be a 59, 60% return if it's annualized, okay? And so 60% is a very good goal to shoot for. A little crazy, um, but but worked out. And this was 11 times better than this 59% because we achieved it in such a short time frame. So you can see here where we're stacking up multiple factors in order to get the most bang for our buck, the quickest wins, and obtain a higher ROI. So now I can reinvest this money into a different position, again, which has a high ROI, and again, hope for a high return multiple in order to get more than what I'm even risking. So I'm risking, X amount in order to get 60% ROI. Again, this is insane, not really a good idea to shoot for this high, but I'm even getting more than that because of how quickly it closed. So that's a summary of what this closing table is. So I've gone over this section, I've gone over this section. So in future videos, we'll go over the entry, which, it's pretty self-explanatory. And then this thing. But this is probably the most important aspect here in order to make sense of why I closed this position after 2 days, even if it wasn't 50%. So anyway, that's it for this one. If you could hit the YouTube things, and I'll talk to you next time.